Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, April 8th. Wall Street is higher so far today, bolstered by a surge in crude oil and Federal Reserve Chair Janet Yellen's comments pointing to resilience in the U.S. economy. U.S. crude rose 5% on rising hopes that top producers would agree to freeze output, and economic indicators in the United States and Europe would push demand higher. Yellen, in an appearance with former Fed Chairman on Thursday, said the U.S. economy was on a solid course with some hints of inflation, putting the central bank on track for a gradual increase in interest rates this year. U.S. stocks have been volatile throughout the week, with the S&P 500 down 1.5%, as investors fretted over a cloudy outlook on rates and signs of weakness in the global economy. Now, please know we will start first quarter earnings season next week, and analysts expect earnings at S&P 500 companies could decline 7.4% in this first quarter. And on that cheerful note, we will look at three charts that could give us some insight into the week to come. First of all, we're going to look at our usual chart of the S&P 500 spider, the SPY, but instead of looking at a daily chart, which we often do, we're going to look at a longer-term chart, a weekly chart. When we do that, that means that every candle you see on this chart actually represents one trading week. Of course, with the close is on every Friday. Also on this chart, you'll see a 30-week simple moving average. Sometimes I use the 21-week, sometimes I use the 30-week. In this case, I've used the 30-week as it is a very good trend indicator for the SPY, and it also gives us a little more room here for to look at some support and resistance areas. So, as we look at this weekly chart of the SPY, we can see that as I captured it today, it was trading at $205.58, which is about $20.55 on the S&P 500 itself. Now, this weekly chart gives us a clear look of how the SPY, or the S&P 500, if you want to think of it that way, did come up from 2009. It did come up to these all-time highs in 2015 and then started to give way, and it makes sense. We've had a bull market basically with a couple of hiccups in 2011 and 2012. We've had a bull market since 2009. This is an old bull market, people. Markets move in cycles, not in straight moves up or straight moves down forever, and I think we all know that. So it makes sense that this market could be getting a little bit tired, and it showed some of that tiredness. Indeed, last summer of 2015, certainly as China had its problems, we moved down the first of this year and pretty much caught this support line right above 180 or 1800 on the S&P 500 itself. So went about 180 up to about 182. And because this area seems to be a good line for support, as it's used many times by buyers, I put a red line here because just as I put this red line on our daily charts, this is where we absolutely positively don't want the SPY to fall below, or we could head into a bear market. So far so good, however, and I will note that if we look left on the chart, we can see that indeed in 2014 this area also acted as support, and if we just want to get carried away and move all the way back to the early part of 2014, we can see that this 182 zone was also important, and of course if we wanted to, we could just keep right on going and see how important this particular number is on the SPY. So there's a lot more to see sometimes on a longer term chart, and I encourage my traders and investors to put these kinds of charts up so you can see more. At any rate, you can see that what we need to know as far as trends go, the SPY made an all-time high by mid-2015 when it rallied back up in September, October, November to try it again. It couldn't go as high as it did before. Now we've fallen back down, of course, in January and February of 2016, rallied back up in a beautiful rally, but right now the SPY is hesitating again. Now, what we have to know is we're looking into earnings season next week. Of course, we're going through spring and going to look at the summer months, which are usually pretty quiet. So what we want to know here is, can the SPY make a higher high? And my guess is with earnings season and so forth, instead of making a higher high, unless we're incredibly resilient, I would be closer to thinking that we would move here in a range, perhaps from maybe from 210, not 210, from maybe 208, 2080, maybe down to 200 or even 195. With earnings season again coming in and looking to be negative, to the downside, I could see that we could trade in a range here for a while, and that would certainly not be the end of the world. If low interest rates continue and the market is happy and earnings are better than we think, then maybe the SPY moves back up to this 2100 or 210 range, where it will find more resistance, and then who knows, it could move back up. So we're in a wait-and-see zone right now. We're in a wait-and-see zone to see what the earnings how earnings come through. That's going to define a lot of the move of this market on an overall basis in the next 3 weeks. Okay, our next chart today, we're going to look at a chart of the Select Sector Spider Technology ETF, symbol XLK. We haven't looked at this in quite a while, and of course, this holds in it all the big high-tech companies. Top components in the XLK are Apple, Microsoft, AT&T, Google, or Alphabet we should call it now. Did I say Facebook? Okay, so these are some of the movers and the shakers that have been very, very strong in the past years. And as you can see, the XLK trading, when I captured this chart, at $44.23. This is one strong dude, and certainly technology is the wave of the future. We have to ask, though, with every single week being positive since January, has the XLK gone up too high too soon? Again, trading at all-time highs right now, or very close to them, which we had an all-time high actually on April 1st of this week. So, or just the past week. But can the XLK, can these big tech stocks maintain their momentum higher? How are they going to report earnings in the coming weeks? Are they going to be strong enough to shoot them up past this high at about 45, or are they too going to have to come back in and trade in a sideways range with some good earnings, some bad, maybe between 42 and 45 in the next 3 weeks? Please know that when these earnings come out, like Amazon, like Google or Alphabet, we'll call it, like Facebook, like Microsoft, these have the power to move indexes up and down, like the power shares QQQ, which these are also the top components of. They have the power to move these indexes up and down pretty dramatically. So let's see what happens here, and of course they affect the S&P 500 as well. So again, we're in wait and see mode. Will it come down and trade in a range? Will it have the strength to move higher? Stay tuned and we'll find out in the next 3 weeks. Now, of course, all eyes have been on oil this week, as we got on Wednesday. Every Wednesday we have oil inventories come out at 10:30 a.m. Eastern. And the inventories this week, for the first time in a long time, showed a draw rather than a build. So we actually used some oil this week. Everybody's excited. Everybody's happy. Certainly, the drawdown in oil over the last year and a half. A lot of people have lost jobs because of these oil companies moving down. So we're happy to see them move up for a number of reasons, not only our investing purposes, but other reasons. Now, the XLE, despite the fact that oil has not been moving up this dramatically, and you can check out the USO exchange traded product to see basically the move in oil indexes, but the XLE here has been gradually, ever so gradually moving higher, stabilizing up, down. Today it gapped up and opened and is now trading at $62.52. I will be looking and watching the XLE in the next couple of days to see if this is a place that would make sense to possibly get into this ETF or the companies that are listed on it. And of course, the top components are Exxon, Chevron, Schlumberger, Pioneer, and EOG are some of the top. So it is trading above the 50-day moving average. That's a good thing. It's got the 200-day moving average coming down as potential resistance. It's trading right between these two, and today right atop the 20-day moving average. So as long as, I'm going to say in the next week, because it could pull down a little bit, could go higher, in the next week, as long as the XLE can stay above the 50-day moving average, and the 50-day moving average comes in now at about $59. So as long as it can stay above $59, I will look at it as a potential long candidate, or at least some of the companies in it. Again, I wouldn't buy very much before it moves up and closes above the 200-day moving average, because this is coming down overhead. And whenever a moving average does that, a particularly strong one like the 200-day, it can put some resistance on price. So maybe if oil keeps going higher in the next week, maybe buy a small amount of the XLE or a related oil company, and then see if it can move up and above that 200-day moving average, and then maybe add to the position. But please keep in mind, oil companies have had a heck of a year and a half. When they come out with earnings, these earnings may not be very good because of what they've been through, certainly in the last year and a half, and even the first quarter. Note this is the first quarter and the move down. So please be very, very careful if you decide to get into the oil space. Now we're going to go on to the coming week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Tony's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members a few minutes after the session ends. And now for the coming week's economic reports. Not much going on Monday and Tuesday. Wednesday we have the Producer Price Index, retail sales, and crude inventories. Also the Fed's Beige Book at about 2 p.m. Eastern. Thursday we have the CPI, or the Consumer Price Index, and our usual weekly jobless claims. Friday, we have the Empire Manufacturing Index, and please know, as I mentioned before, we are coming in next week, will be the first week of earnings season, and many, many banks will announce. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.